Hello and good morning to this final GoNoGo Charts show for the year 2023. Good morning, Alex Cole. How are you doing?
I just can't believe what you just said. Can it be true?
Yeah, it seems like time has evaporated. This year has gone by faster than ever before. But we thank you all for checking in each week, helping us look at the trends of the marketplace. And Alex, why don't we, as we always do, start with sort of a top level view. Today, instead of that four ticker asset class heat map, we're going to look at six securities across these absolute trends.
Yeah. I mean, we've obviously got the S&P in the top panel as a price chart, but when we look at those 5 panels below, we've got the equity markets, the US equity markets, we've got treasury bond prices, of course, not rates. We've got the commodities index, the dollar, and Bitcoin. And you can see that the trends have been now in place really at least a month. Even commodity index has been in its no-go now since the end of November, beginning of December, and the rest have been in their respective trends for a little bit longer than that. Equity markets, the top panel, strong go bars. We're seeing this week even creeping higher again. Treasury bond prices, strong blue go bars as well. You can see how strongly those bond securities have performed over the last couple of months. Commodities, like I said, have been in a no-go trend now for just about a month, and you can see that that's weakened a little bit over the last week or so, and it's going back and forth between pink and purple bars. And the dollar, of course, stayed in its no-go trend, showed some weakness a couple of weeks ago, but stayed in that strong no-go trend now for the last couple of weeks coming into the end of the year. And Bitcoin, of course, has really been in a great go trend now for several months and still looking pretty strong.
Absolutely. We thought today in our final show of the year, let's kind of do a little report card. A lot of attention being paid to the headline news. S&P 500 closing above all-time highs these last couple of weeks. Certainly stacking up for another gain this week. But we want to look around the world and across asset classes to understand where we should think about asset allocation and idea generation for the year ahead. Maybe some things that have been working that maybe we don't want to get too much of an endowment effect going. If you've had some things in your portfolio that have been really strong performers, that's great. But we don't want to be wed to any one idea. We want to collect the information first and then make our investment decisions afterwards. So, Alex, let's go through these top level. Let's start with the S&P 500. Just take a look at the price action on a complete go-no-go chart. If you're just joining us for the first time, welcome. What we're doing is taking a blended model of lots of technical information. A lot of folks have algos or a trend following model. We're spitting that back out onto the charts, blending all of those widely tested and heavily used technical indicators, but removing them from the price chart so that we can keep our eye on a clean and elegant view of price action itself. We want to capture all the information from those robust indicators, but we're just painting the bars according to the trend strength and direction. And then in that lower panel, the GoNoGo oscillator, same concept, blending multiple ideas from momentum, volume, and volatility into a single indicator. So Alex, walk us through this chart of the S&P 500 now at all-time highs. What are you seeing from a trend perspective?
Well, it was interesting here, Tyler, is we entered the go trend right after the oscillator broke above positive territory, and since then it stayed in positive territory and been supported by the zero line. This was a critical moment here. We made that initial break into a go trend. We moved sideways for a couple of weeks, and then we found support. Momentum surged in the direction of the underlying trend. Now, the only thing that I'm seeing here is that we had a recent go counter trend correction icon, which told us the price may struggle in the short term, and it really didn't. We kind of right away we moved back and we moved past where we had been on that recent high. What I am seeing is slightly less momentum at the moment as we are making new higher highs. So could this end up being some bearish divergence? We'll keep an eye on it. If price moves higher here and momentum picks back up and hits these highs that it was at a week or so ago, then that will be fine. But if it makes a lower high, we would consider that bearish divergence. But really at the moment, the weight of the evidence says strong go trend, bright blue bars, momentum very much in positive territory.
Absolutely. And let's pop that out to a weekly basis as well, just to give a little more context for how far we have come in 2023 and even over the last few years.
You can see how we took out these highs here. We've been looking for that now for a long time, but we're now at all-time highs, as you said. 3 consecutive weekly closes. I would imagine this will close higher than that prior high. I mean, we'd have to fall pretty drastically over the next rest of today. But 3 weekly higher closes it's going to look like, and all strong blue bars. Ever since we had this heavy correction that really gave us cause for concern, we can see how strong the response was. Price running higher now for several weeks in a row, and momentum is overbought, which, as we all know, is just can often be a sign of really healthy markets.
Absolutely. And let's turn over to a chart of the TNX, the 10-year Treasury yield. We talked a lot about bond buying, the price of US Treasuries trending higher, and that, of course, equates to a falling or a no-go trend in the rates of US government Treasuries. Talk to us a little bit about how persistent this no-go trend has been.
Yeah, it's been pretty strong. We haven't seen too much to challenge it. Right when it entered the no-go, we sort of had a quick retest. You see that amber bar there as the oscillator rose to challenge the zero line from below, but it was quickly rejected. And then ever since then, it's been a strong move lower with a mixture of purple, a few pink bars sprinkled in, but lots of lower lows, lower highs, oscillator in negative territory. Oscillator really doing its job of confirming these moves in price. Every time price moves lower, the oscillator making new lows as well. So this could be a new lower low. We'll have to see how much we rally from here. We can see the oscillators turned up in the lower panel, but still in negative territory. Just really a series of lower lows and lower highs.
Absolutely. Market certainly pricing in the comments from Fed Chairman Powell about an end to rate hikes. But I think as markets are always a forward-looking indicator, maybe pricing in several cuts through next year. And we'll have to wait to see how that plays out. But for right now, seeing those Treasury rates heading in the lower direction and a no-go trend.
And I think, Tyler, just to point out, that's something that I've been asked a lot over this winter break here, the holidays, is how many rate cuts are we going to have this year? Well, we don't know that, right? But what we do know is that the rates are in a no-go trend. And I think it's important to keep our eyes focused on the charts and on the price, because we really don't know. Some people saying, oh, I heard that there's going to be 4 rate cuts in the next 4 quarters. Well, we have to wait and see. But the price chart is telling us that these rates are in a no-go trend. And that's really what's important.
Yeah, I think just having an advantage over all other investors starts with seeing where we actually are, what's actually happening, and being able to be objective about that rather than trying to predict the future. Sorry, folks, if you were looking for the crystal ball, we're not the ones selling it. Alex, let's move on from rates. Let's check in on the US dollar. We often use UUP. It's an ETF proxy for the dollar index, just to get a sense of volume as well. Similar no-go trend, maybe not as steady state as we've seen in the rates. Talk to us a little bit about how persistent this is.
Yes, similar though, as you said, and these two macro factors obviously have such an impact on equity prices. So to see no-go trends in the dollar and rates is, really helping provide some relief and some support for higher equity prices. And you can see that we did really test this no-go. We saw a string of weaker pink bars here just at the beginning of the month. Even the oscillator breaking above into positive territory, which of course is a concern for the no-go trend. But you then go back to the price chart, you see that the trend was never broken. We never came out of no-go colors. And then, of course, when it rolled back into negative territory, that tells us that we're seeing trend continuation. That's what these circles are, telling us that the trend is likely to continue now that momentum is surging back in the direction of the underlying trend. And so that's really where we are. Strong no-go trend. And now momentum, of course, back in negative territory, not oversold. So sort of fairly calmly in negative territory at a value of about -3.
And those icons, I mean, the importance of seeing momentum surge in the direction of the underlying trend, that is the holy grail for trend following investors, to see that confirmation and to know those points of whether it is a rollover or a continuation. And it works in uptrends and downtrends in the exact same way. Those red circle icons telling us that momentum is surging lower in that no-go trend, giving us more confidence in that directional play. So, Alex, let's move on from the U.S. dollar. Let's take a look at U.S. oil. And we were looking last week about whether or not the final low had been put in. Lots of different ways to read this chart, but I'm certainly seeing some constructive evidence within the NoGo trend as we break above out of a go-no-go squeeze into positive territory, and now retesting the zero line, looking for support. Seems like a pretty important moment of decision here for oil.
Absolutely. This is a very critical inflection point. And we were talking last week about how so many analysts were talking about whether or not this was the ultimate low. And we were sort of countering that, if you will, by saying, yes, but if we don't go significantly higher, this is just another lower high, right? So we know that lower lows and lower highs make downtrends. And so right now this was the last low. So will we take that low out and go lower? We don't know, but we did roll over at a new lower high, right? This is a lower high than the previous high here. So at the moment, this no-go trend still looks to be in place. Like you said, though, if we look at the panel below, this is a bit of a blip in the wrong direction. If we're thinking that the no-go trend is healthy, we know that the zero line should have provided resistance here. And as you said, it broke out of a small squeeze into positive territory, but has returned really quickly within one bar back to that level. So sometimes we see this. You can see this here, Tyler. If we look back on the chart, a very similar situation. It should have broken out of the squeeze into positive territory. It blipped below, came back, built another small squeeze, and then ultimately went in the direction that continued the trend. So what we'll really need to see here is, does this rally off the zero back into positive territory, or does it quickly return to negative territory? And that'll allow the no-go trend to continue.
And for all of our viewers, that idea of volatility compression, what we're just trying to do is build a visualization of what's happening with investor behavior in the marketplace. And so when you have that indecision or that tug of war between buyers and sellers, what we see is momentum becomes neutral. And the way that the GoNoGo oscillator is constructed, when all of those inputs are in their neutral territory, it's going to be at the zero line, telling us that there's no directional momentum. Doesn't mean there's not a lot of trading, but that we don't have clear control from bulls or bears. And at this moment of indecision, just like the one you're highlighting there in late August, what we're seeing is a continued tug of war and breaking out of that squeeze to the upside, unless it's sustained, could simply be a reversal back to lower lows and lower highs. So we'll be keeping an eye on U.S. oil with you each week here on the GoNoGo show throughout 2024. But let's move on from oil. Let's pull up a chart of gold, GLD, the ETF ticker symbol. How are we doing, Alex? We're back in Go Trend conditions.
Yeah, and we've been back in Go Trend conditions for a couple of months now. I think gold's been sort of very difficult to follow and very difficult probably for people to understand or get any kind of sort of sense of stability. We've seen so much movement up and down over the last couple of years, but this is one of the few times where we've sustained a Go Trend for any period of time. And you can see that we've got a series of higher highs and higher lows. And in fact, yesterday we made or 2 days ago, I should say, we made a slightly higher high again. Yep. And generally speaking, the oscillator's been supported by the zero line. So not the cleanest and not the sort of the most confidence inspiring movements, but definitely a Go Trend in place, strong blue bars, higher highs and higher lows, oscillator now back in positive territory, above the zero line at about 3. And again, the same sort of situation here. A long squeeze had this not blipped into negative territory. So you kind of put these two together, and now you can see this breakout here, giving us trend continuation icon in the Go Trend.
I think it's important to point out that time frame matters. And for a lot of folks that we talk to, they're trading shorter term and looking at that high in very early December as kind of a classic blow off top. Things were accelerating as everyone was watching that multi-year, even decade-long resistance level right around $2,000 an ounce as a potential breakout for that ultra long-term cup and handle formation, and getting really short as gold rallied to those levels. So great trade. But what we're seeing here on this, on a daily chart, is that there's a series of higher highs and higher lows in kind of a broad channel, still moving upward. And now we're back retesting those $2,000 an ounce price levels. So the more times that that gold is trying to break out to all-time highs, the more times those levels are tested, the more likely it is that eventually price will break through. And so reading this chart just at face value, trend conditions are in strong go. Momentum is positive. It's found support at zero. We've broken out of a go-no-go squeeze. We have trend continuation icons. To me, in the longer term view, this looks very, very constructive.
Yeah.
Excellent. Today, a little different from our regular shows, we're going to take a look at a number of different relative strength maps. Let's start, Alex, with a equity rel map, looking at global equity indices around the world and how they're performing against the S&P 500. Now, remember, we just pointed out that S&P is at all-time highs. We're trading in strong go trends. So when we're looking at these relative ratios, we're looking at country level indices that are outperforming the S&P. They're rising higher, faster. And so walking through this map, we're definitely seeing a lot of blue coming out of the Latin American sectors and India, and then a little underperformance from China and the rest of the Asian equity indices. Alex, do you want to pick out any of these that are really catching your eye?
Well, no, I just think the point is that it's it's amazing, right? Like, you're talking about the equity markets in the US at all-time highs, and then you might, if you weren't looking at some sort of relative strength model or some sort of around the world perspective, you wouldn't realize that there are opportunities to perhaps be getting even more return from some of these other countries. I mean, to see half of this map outperforming the S&P is quite remarkable when the S&P is at all-time highs. So, you could look at a map of any of the Latin American countries, or you could look at India, you could look at some of these and sort of look for opportunities elsewhere if you were so inclined. But it just is incredible to remind yourself that even with the US equities at all-time highs, take a look at this map. And it's not just sort of these have been fairly well sustained now, right? Like, if you're looking at the middle of this map, and here we're talking about some Latin American indices, you've got a couple of months here of outperformance, and the same at the top here. So quite interesting, actually, I guess was my point in a long-winded way of saying it.
And in a recent interview with Gina Martin Adams for the CMT podcast, one of the pieces of work that she was presenting was a historical look back at Fed rate cuts, and when we're in a cutting cycle, the greatest beneficiaries tend to be emerging markets rather than developed markets, and that decisions by the U.S. central bank tend to be very strong tailwinds for some of those emerging markets. So when we're seeing things like Mexico, Brazil, India, not just outperforming, but racing away ahead of the U.S. equity markets. It's just something to keep in mind as we all suffer from home bias. There is a wide universe of equities to invest in, and in this frictionless environment with ETFs, there's certainly a lot of opportunity that doesn't take a ton of effort to participate in from an asset allocation standpoint.
Yeah.
But Alex, let's take a little closer look at India. Earlier on this fall, in some travels, I did a Stock Charts TV show from India, all about India. Let's take a look at a few of the top level equity indices in India. So if we were to look at the Nasdaq, the Russell, the Dow, and the S&P here in the U.S., we could look in a similar fashion at absolute trends in the Indian equity markets. The Nifty 50 being kind of a large cap index. You can look at just the bank sector, Bank Nifty, and then moving down to the Nifty Junior, so like the next 50, or more of a mid-cap flavor, if you will, and then moving on to the BSE Sensex index, and wider and wider nets of securities. The idea being here that across the board, everything is in strong blue go trend conditions. And so no matter how you're slicing the Indian market, these charts are looking pretty incredible. And Alex, if you still have the India sector rel map, we can take a look at some of the breadth that's been persistent in Indian markets as well. And it's beyond just a single tech sector or a single leadership group. We're seeing across the board in India a lot of rotation, a lot of breadth expansion. And this was one of the points that we were talking about in October. It was just how well Indian markets were stacking up versus what was happening in the U.S. with very narrow leadership and certainly a lot more critics of the bull market flavor that we had been in. So for all of you stock charts investors and asset allocators, taking a look at some of these emerging markets, maybe emerging markets ex-China, could be a good play for 2024. But we won't spend too much time digging into all the individual equities in the in the Indian sector realm map. Alex, let's turn our eye real quick. Yeah, we can look at just the top level index.
Yeah, I
Absolutely.
was just going to point. I'm just going to say. I mean, you can even just visually see how fast that run has been and how strong momentum has been. Like, this is something that you don't see that often. When you do see momentum remain elevated, that's always really a positive thing. And this is just the top level index for the India ETF, just to show that that's a faster rising trend than what we were seeing in the S&P. But sorry, that was just me sort of playing around. I wanted to show that, but go ahead.
I love it. I love it. And let's take a look, instead of just talking equities, other outperformance groups. Do you have the crypto rel map relative to the S&P 500, how the top 4 cryptocurrencies by market cap are performing? Spoiler alert, we have looked at this ahead of today's show, and there's a lot of blue and green going on in here.
Yep.
Blue and aqua, excuse me, Alex.
Yes, thank you.
And you can change INDA to
Yeah.
SPY if you don't mind.
Yeah. I mean, this is incredible too. You know, just by putting the S&P in here, you can see the trend that the S&P has been in, and then you can see that actually we've got relative outperformance for so many. Well, in this chart, we've only included a few, but Bitcoin, Ethereum, and others relatively outperforming this chart, right? So if you imagine this chart is a very strong Go trend, and we have relative outperformance here from the major cryptocurrencies. And you can look at a Bitcoin chart on its own and you can see that. Of course, we know where Bitcoin has gone over the last couple of months. So strong outperformance in the crypto sectors as well.
And, you know, our analysis, we don't get way down the cap scale to some of those lower level protocols, and things get a little dicey with initial coin offerings. And I think as a lot of investors, you know, may have been scorned, burned by some of those ultra coins that were coming out in 2021. Let's not forget about the fact that these trends have been persistent for over a decade now. Alex, let's pull up just a plain old GoNoGo chart of Bitcoin.
Yeah, I mean, as you said, it's not. This is a technology that's here to stay, right? It's not just a meme coin. There were some of those coming around. Obviously, you remember 2021, but the technology behind cryptocurrencies is not really going anywhere. And this is the Bitcoin chart, and you can just see this has been a very, very strong Go trend. We've seen price go from, you know, well under 30,000 to now up to 43,000. What I would say about this chart is this is a really cool moment here, where we could be setting up for more gains, or we could be setting up for a correction, and we'll watch to see that happen on the chart. But you can see how as Bitcoin has made a rally, we've then seen some sideways price movement, and then we watch to see if that support is found at the 0 line. We see the trend continuation, and then off we go again. So we're in that kind of moment here, Tyler, where we've had a recent high, sideways movement, counter trend correction arrow pops up, sideways movement in price. That's caused the oscillator to drop to the 0 line and stay there, mostly with a big squeeze building that was broken into positive territory, but we find ourselves right back at the 0 line again. So if we find support here, that'll be another Go trend continuation icon. Remember, I personally like to see clustering of continuation icons. When I see that, you know, when you see 1, 2, 3, or you see a couple as price moves sideways, it sets up for a move, I feel like. So we'd like to see support being found here, and then we'll get that kind of situation again, and we'll look for new highs. If it obviously, look at how clean the support has been at the 0 line. So any kind of fall into negative territory would be a concern. And then we'd watch to see the trend and see if GoNoGo Trend can continue to paint Go colors. But at the moment, what we're looking at is support being found at the 0 line.
Absolutely. And let's pop that out to a weekly basis as well, just to see some overhead resistance areas a little further back on the chart, and how much room we have to move.
Yeah, there's a prior high here that's a little bit worrisome, might cause a bit of a nuisance, but you can see that the weekly chart has provided some really nice trades for people. That we've got a Go Trend here back in April, March actually, and then we've been making new highs since. So on the weekly, very strong blue bars, heavy momentum overbought at the moment on strong volume. Really good signs. We just would like to take out that prior high here, but even without that, we could get up to, you could get up to 48,000, right, before you actually run into that. So if you look at that on the daily chart, that gives you some room up here on the right side.
Absolutely. Lots to consider as we think about alternative asset classes, alternative equity indices around the globe, and then even thinking about some performance from the fixed income market. But for those of you who have an equity-only mandate or are just more comfortable investing in U.S. equities in your own portfolios, let's turn our gaze back to what's been working in the U.S. and let's start, instead of the sector rel map, let's go to the Morningstar 9 style boxes. So for a lot of asset allocators, as they're looking to their year ahead, you want to understand whether you should own value, growth, small cap, mid cap, large cap, and in terms of what's working,
All of it.
relative to the S&P 500, we are seeing a great breadth expansion and rotation across style boxes, across the cap scale. As we talked about a few weeks ago, in everything rally, there certainly seems to be a lot to be favored on this chart from a style and market cap perspective. Alex, if you pop that out to a weekly basis, we can see that this trend is actually just beginning, right? Weaker pink no-go colors for some of these, couple of amber neutral weekly bars. And so this is sort of new beginnings as the rally really took off in December. So when we have this weekly time frame, it's no longer just the large cap and growth names that are working. We're starting to see green shoots of opportunity across these style boxes and cap scales.
Yeah.
And now we can turn our eye to the GoNoGo sector rel map of the S&P 500, taking a look at each of the 11 sector spider ETFs relative to the performance against the benchmark S&P 500. And again, a lot of expansion here on this daily version of this relative strength heat map. Alex, talk to us about some of those cyclical sectors that have really begun to outperform.
Yeah, it's been a couple of weeks now. We've been talking about financials, industrials, now materials is in its second week of outperformance. So that middle area of the chart, I don't know why, or I don't know if it's the same with you, Tyler, but I like to see the middle area of the chart do well. To me, that seems like the economy working, or it seems like we're finding our feet in terms of doing things, right? Those are to me, those are the doing things sectors. We've got industrials, we've got financials, materials, builders, people getting things done. And so the middle of the chart seems to be positive for me when it's in Go Trends. What I would point out here is this, technology is really struggling to stay on the right side of no-go colors, right? We've been in amber bars for quite a while. And when we were even looking at the S&P, I was going to mention that, given the struggles in the news with Apple, I mean, I don't know how many people have Apple Watches, but the ban on the Apple Watches, that's a huge deal. And yet the Apple chart is holding up relatively well in terms of it's corrected, sure, but we're at the zero line. We're still in go color. So if Apple can ride this out, we know how much Apple, how large of a company that is and how much of an effect that has on the index itself. If Apple can ride out that trend, maybe we can pull up that chart quickly in a minute, then we may well see this go back to go colors. So it'll be interesting to see if technology can hold on to its trend, given the uncertainty we're seeing at the moment.
Yeah, and I think the message to point out from charts like this, where investors have been rewarded for holding some of those magnificent 7 names or being very overweight technology and consumer discretionary names, and now what we're seeing, the cyclical sectors of the economy really working. We're seeing home builders and real estate and rotation into other sectors of the marketplace outperforming the benchmark index. And so I think the goal of being open-minded as investors to lots of different scenarios that could play out here
Right.
in 2024 and in the weeks and months to come. What we want to be aware of is not holding on to too many recency biases. So definitely the tech sector does not look over. This is not a message to liquidate all holdings in the Magnificent Seven. However, as investors, we want to keep an open mind to the fact that some of the sectors that were working in the last cycle in 2022, when we saw those drawdowns in a bear market environment, we did see some of the cyclical sectors of the economy moving higher into leadership positions on a relative strength basis.
Yeah.
And here we see the session opening for today's final day of 2023's trading. But I think there's a message here as we're seeing that rotation to just keep an open mind to what might be in store for us here in 2024.
Yeah. Tyler, do you mind if I pull up that Apple chart really quickly?
Let's do it.
Just because it's very, I think to your point, you want to be open to any situation, right? And you could, also be open to the fact that if Apple survives this and rallies, that could be opportunities to re-enter the technology fray as well. So This is a very interesting chart, because if you look at this on the daily basis, we seem to have found some support here where we have before, where it once was resistance. So there's the concept of polarity we talk about a lot, but also as that correction from prior high has brought the oscillator down to the zero line. You see the squeeze build this week as the market digests the news, and we are, holding at those levels. So, I guess my point is that there's two ways to look at it. One, you've got to be open to everything, but also you don't necessarily want to go out and sell all your stock in Apple or technology if the chart is saying the Go trend is holding. So just be sort of mindful of what the technical analysis is actually telling you. And what I'm seeing here is a higher low, and I'm seeing some support, and I'm going to watch to see what happens here at the zero line. Now, of course, if this is broken into negative territory, that's one other sign that, okay, we need to really be careful with the Apple holdings and look to other areas of the markets, like you said, that are coming into that rotation. But if we find support here, breaks out of the squeeze back into positive territory, then look for new highs on Apple, right? That's what the technical analysis might be saying.
And such an important message, right? The news headlines can be very scary, and they can come at any time, and you can be very unprepared. Looking at what's actually happening in the marketplace and making an objective decision, not an emotional one, is what we're all about here at GoNoGo Charts. Right. So, Alex, I appreciate everything that I get to do with you. This is the joy of my week each week and each day. For all of you who have been watching, thank you so much. If you're using GoNoGo Charts in your own portfolios and your trading and investment accounts, we're glad to hear it. Feel free to shoot us a note, info@GoNoGo Charts, with any questions or commentary. Let us know how it's working for you, what time frames you trade, what kind of securities that you're trading. And for all of you, we wish you a very happy new year. Hopefully you're spending some time with family and loved ones. Sending you all light and love, and we'll see you back here in 2024.